Let's hear what Paul Venables has to say. He's finance director at Hays, the UK's biggest recruitment company. Thank you so much for coming in. Paul, in terms of, it looks pretty dire out there, the situation, but how does it mean that your company is actually performing? Because it may be possible that they're asking for you for extra support whilst they can't actually increase their jobs figures themselves.
I don't think that's what's driving it, right? What drives our market primarily is candidate sentiment. So where the job market is in the UK at the moment is all big companies will replace anybody that leaves today. The real issue, therefore, is how confident are people to change jobs. Now, what these results showed, our private sector business was 7% up in the UK.
Yeah.
And yes, that's slower than a quarter ago where we're 18% up. It's getting a bit more difficult. It's a bit more difficult in banking. There's still some good spots. We've seen a lot more jobs, for example, in construction property, in retail and IT. But broader, a bit less sentiment. Public sector clearly still very difficult. We're 34% down year on year. So UK mixed. I think candidate-like consumer confidence weaker than a year ago. Outside the UK, very strong.
Oh, and outside the UK, notably, I would imagine in Germany. Is there a shortage of skilled workers?
Yeah, significantly. I mean, part of what we're having to do now is not just look across the whole of Germany. For example, we're the largest recruiter in engineers and IT professionals. So it's across Germany that we're recruiting people. We're also going across Eastern Europe, finding people with the languages and skills and bringing them into Germany. It's a very strong market.
But I understand that you say it's candidate sentiment, but at the same time we have banks actually getting rid of 15,000 people. That must have an impact on your business.
Not yet. And really, I don't think that's the case. Look, all of this has a backdrop of Lehman's, you know, kind of almost 3 years ago now. That's the worst job market we've ever faced in our 40-year history. It really is all about candidate confidence. So our business, like retailers, like house builders, there's a link. How confident are candidates to take a risk, whether it's to buy a house or to change jobs?
A lot of is still being asked of workers today. The general message seems to be, certainly here in the UK, work harder for no more money. Do you think business leaders are still stuck in a sort of crisis mentality, that perhaps really these days, today, there should be more carrot than stick?
I'm not sure so, 'cause I think most companies are saying we've got a fabulous opportunity outside the UK. We're no different. You know, 67% of our business is now international outside the UK. So most businesses are increasing their activity there, hiring more people there. But in the UK, we're all cautious. So clearly what we're not going to be doing is doing large pay inflation. And quite frankly, that would be counterproductive anyway. None of us want an increase in UK interest rates.
All right, in terms of what you've said, some of the sectors that are doing the better, what are the ones that are doing the worst? The ones that actually people are very prudent and that candidates have terrible sentiment?
Well, the worst is by far the public sector in the UK. So if I really give you two statistics, we're the largest white-collar recruiter in the public sector market. In our non-frontline services, so we have a big education business, that's doing well. In the rest of it, back office, construction, property, we're now nearly 70% down versus peak. So most authorities have complete job freezes in place. They're reducing their temp book. So that's the hardest and clearly the weakest sentiment. Private sector recovery, the concern is it needs to begin to pick up further to create jobs to replace the ones that are going to be left in the public sector.
All right, Paul Venables, thank you so much.